Good morning, everyone, or good afternoon, I should say. Welcome to today's webinar. We are going to give everyone a couple more minutes to filter into the meeting, and then we will get started. I do ask that you keep yourself on mute. Everyone has entered the webinar on mute currently, and if you will keep yourself on mute during the presentations, that will reduce background noise, but we'll give folks about another minute to file in. And with that, I think we have some folks that may enter the waiting room. We'll let them in during their presentations. But my name is Landon Masters. I'm the Communications and Community Outreach Manager for the South Carolina Office of Regulatory Staff. And we are excited to host today's webinar through the Energy Office of the ORS with the Coalition for Green Capital, Green Banks 101, exploring the potential for a green bank in South Carolina. Just want to do a couple of housekeeping notes before we get started with the presentations. But as I mentioned, everyone is on mute. If you can please remain on mute through the presentations, and you will have the opportunity to unmute yourself at the end to ask any questions. But during the presentations, we do ask that you put those questions in the chat box. That can be found in the bottom Zoom ribbon, or wherever your Zoom ribbon is. Click on chat, and you can see that there to put your questions. We'll address those either during the presentation, if they're time sensitive or relevant to the presentation that's being given, we will answer those questions during the presentation. If not, we'll get to them at the very end. We are recording today's webinar, so we will share a link to the recording and a follow-up email to all the registrants. So even if someone was not able to attend the webinar this afternoon, we will send around a recording that will be housed on the Energy Office YouTube page. With that, I'm going to turn it over to Catherine Reed, who's going to get us started with the webinar and kind of go through a run of the show.
Great. Thank you, Landon. And thank you, all of you. Thanks to all of you for being here today. We're really excited. I know we sent an email earlier today that we had over 100 people interested in attending. That's really gratifying. At this point, I think we have about 60 people who have called in, and maybe we'll get more, but we're very excited about the interest in this topic. And so we're really gratified by the interest and by your willingness to take an hour and a half of your time today to talk with us. So my name is Catherine Reed. I'm the Deputy Director of the State Energy Office, which is a division of the Office of Regulatory Staff. I want to go over, if you could advance the slides, Landon, please. I wanted to go over what we're going to cover today. The purpose of today's webinar is really just to explore what are green banks. I know people hear about this a lot. It's come up in many conversations, which I'll refer to shortly. So really we'll look at what are green banks and what opportunities there might be in South Carolina for establishing such an entity. And if you can see from the agenda, I'll start by providing some context for South Carolina and how we've come to this conversation. Then I'll hand it over to our presentation partners today, the Coalition for Green Capital. We're thrilled to have them to bring their subject matter expertise on this topic. Hannah Beinecke with the Coalition for Green Capital will be talking about what is a green bank, just to provide the nuts and bolts of that. And then Jill Bunting, also with the Coalition for Green Capital, will be talking about what's going on the national level regarding the Clean Energy and Sustainability Accelerator. And then we're really thrilled to have what we're calling perspectives from the field. So we're going to start with North Carolina. They have just launched a nonprofit that has been established as a green bank, and Jen Weiss with the Duke University Nicholas Institute will be providing us with a little bit of overview about what's going on in North Carolina. And then I will turn it over to some of our South Carolina stakeholders. We'll have John Frick with the Electric Cooperatives of South Carolina and Keisha Long with the South Carolina Department of Health and Environmental Control. both provide some perspectives from South Carolina on this. And then finally, we'll have steps forward. We'll have a Q&A opportunity. So if you can advance the slide, please. And one more. Okay, so for the South Carolina context, just so for those of you who aren't aware, the South Carolina Energy Office is a division of the Office of Regulatory Staff, so we're a state agency, and we're funded through the U.S. Department of Energy's State Energy Program. Our mission is to provide energy efficiency, renewable energy, and clean transportation through a variety of programs. We provide technical assistance, financial assistance, education and outreach, and we maintain a data clearinghouse. We are also involved in implementing the state energy plan. A lot of you who are on this call today, we have worked with for years as stakeholders to develop the energy plan, and most recently in our energy efficiency roadmap. So I'm so happy to have you all here today. If you can advance the slide, please. Okay, so the one thing I want to focus on just briefly in terms of framing the discussion for today is to sort of provide an overview of what funding mechanisms for energy projects, which span, clean energy, energy efficiency, sustainability, however you want to call it. We have some programs that we at the Energy Office have either initiated or have some involvement in, and then we want to just refer to some other ones that we're aware of just to provide the context for this discussion today. So for public entities, many of you know the South Carolina Energy Office offers a low interest loan program in the form of Concert Fund. We also provide mini grants on an annual basis. In the private sector, the Energy Office also was instrumental in starting the Energy Efficiency Revolving Loan Program, which we affectionately call EARL, and it's administered through the South Carolina Business Development Corporation. So this is just what we administer or what we're involved in. I also want to just point out that we have recently launched, as many of you know, an Energy Saver tool, which is intended to be sort of a clearinghouse of all the financing and funding mechanisms that exist in the state. So it includes all the programs I mentioned above, plus other entities, programs, weatherization programs, home rehabilitation programs, and other funding sources, utility incentives, and the like. So that is one location where if you want to get a good idea of what's out there, we have attempted to try to pull it all together into one location. If you could advance the slide. Okay, and then another, these are just some highlights of additional programs that are out there. Certainly through the electric cooperatives, a very successful program has been the Help My House program, which is an on-bill financing program. And then there are also programs available through some loans through utilities, but this is by no means comprehensive. There are additional programs such as programs from other federal agencies and state agencies. So again, we wanted just to make it clear that we recognize that there are a lot of different programs out there. We've attempted to pull it together in that Energy Saver tool that we've developed, but we recognize while it's comprehensive and it's impressive what South Carolina does have, we also recognize that there are a lot of gaps in funding, and that's something we'll be talking about a little later during our presentation. Next, please. So to provide some context about this discussion of a green bank, I do want to just briefly talk about what brought us here. So the Energy Office basically kicked off a stakeholder initiative a little over a year ago with the Duke University Nicholas Institute. It was an energy efficiency roadmap, and the intention of this was to really review the 2016 energy plan, which was a stakeholder-driven plan, and look specifically at the energy efficiency recommendations that had not yet been implemented. The intent was to reassess those recommendations, identify possible new opportunities, and develop some more implementable actions to advance energy efficiency in our state. And that involved, as many of you who are on the call were involved in that in some aspect, but it involved assembling an advisory group as well as 6 working groups. And over the course of a year, even through COVID, we were able to have our stakeholder meetings and workshops and working group meetings And we have just concluded pulling that together. We have a set of 20 recommendations. Next slide, please. So, and they've touched on sort of 6 general areas. You can see here we had a working group on each of these blocks. So we had education and workforce, efficient buildings, energy equity, energy burden, financing mechanisms, nonprofits and public entities, and utility programs. So each of these working groups identified sort of the top recommendations with an eye to sort of what was implementable. And the most, I know that this doesn't do justice to the work that was done. This is just a sampling. These are just some of the recommendations that are bulletized here, some of the emerging topics that came out of it. But the reason I'm bringing this up is that this process further identified issues that had already been identified in the energy plan in 2016 of areas that required some implementable action, but all of them had in common that there was an inherent need for funding of some kind. So as you can see, for example, under efficient buildings, one of the things that came out of this was an idea to have to conduct a pilot for commercial building labeling. And there's also one under the energy equity, energy burden working group that looked also at labeling for residential properties. There's some other pilots like a one-stop shop. And even under the nonprofits and public entities working group, there was a goal that was identified. You know, the idea is to have additional goals of like efficiency goals for nonprofits and public entities for the state. And all of those really, when you start looking at them, like what is needed, there's always a need for some sort of funding to make it possible. So the financing mechanisms working group had the unfortunate situation of always being the ones pointed to, like, you guys figure it out. But basically led by John Frick, who you'll be hearing from a little later today, that working group basically like identified several recommendations to further explore funding mechanisms for the state. And one of the things that came out of that was that the state should explore the feasibility of developing a green bank. And you'll hear from our folks with the CGC just shortly that green banks have been successful throughout the country to provide a source of funding for a variety of different projects. And it's not just energy efficiency, it's the whole spectrum of sustainability related priorities. So I wanted to just explain to you sort of how we got here and what the initiative was that prompted us to pull this webinar together. So without further ado, I'm going to pass it on to Hannah to give us an overview of the nuts and bolts of what a green bank is, and then we'll follow up a little later. So thank you.
Awesome. Thank you so much, Catherine. My name is Hannah Beinecke. I'm a program director at Coalition for Green Capital. We're a nonprofit organization that provides technical assistance in the creation of these entities called green banks. So Landon, if you'll hit the next slide, we'll first just start with walking through what a green bank is. So green banks are mission-driven institutions that use innovative financing to accelerate the transition to clean energy and resilience. And we're going to take a couple minutes to really break down what does all of that mean. So Landon, if you wouldn't mind. Perfect. Thank you. So mission-driven means that green banks are not profit maximizing. And that's incredibly important in the kinds of loans they're able to make. They care about achieving a certain outcome as quickly as possible. So making capital available isn't sufficient. It's really about what kind of outcome is that capital creating. All green banks have the mission to help move towards resilience and clean energy, but that's also paired with things like providing access to low-income households and also helping move more private capital into the clean energy sector. Green Bank is also an institution. So institutions are durable, they have cultures, they're flexible, they're responsive to the real world. So this is different from a program which may be static or may disappear if funding dries up and may be implemented without a particular overall objective. Institutions can try something, can fail, and then can try something different depending on the needs of the market. Green banks also use innovative financing. So it's not grants. Financing actually helps to maximize the impact of each dollar. And we're going to talk about how green banks leverage their money after this. But the use of financing means that green banks will actually focus on markets where there's a potential for payback. Financing can be done in tandem with other market development activities as well. And then accelerating the transition to clean energy, green banks really want to maximize market penetration as quickly as possible. So getting just a few projects done wouldn't necessarily be considered a success for a green bank. And this is one of the reasons that they're different than traditional financiers that might have a broader portfolio of loans they're providing external to just the clean energy space. Now, to jump into some more specifics on green banks, as we mentioned, green banks are essentially clean energy investment funds. So they use financial tools to increase sustainable investment. They bring together commercial, public, and mission-driven capital in order to make financial products that increase investment. So the key part here is really that capital is mission-driven, as we mentioned, and this allows green banks to offer financing at lower rates or at longer terms than projects would otherwise be able to find. And this can create an enormous difference, particularly in clean energy financing. This creates additionality in the market, expanding investment to projects that otherwise wouldn't make it to development. Alongside investment, green banks also provide technical expertise, and they work with local partners to break down barriers and to connect projects with capital. So as we'll see in a few upcoming slides, not all barriers in terms of why clean energy projects are not being financed, it's not always just about a lack of access to capital, but it's sometimes also business problems that require technical assistance to find those solutions. And then beyond all this, green banks use methods to catalyze greater overall investment, meaning they use their mission-driven capital to draw in more private investment to expand the clean energy market overall. So this map reflects essentially a decade's worth of experience. Over the last 10 years, there have been 15 green banks created, and they have driven over $5 billion of investment. And the important thing here that we mentioned earlier is that for every $1 of green bank money used, they're able to draw in approximately $3 of private capital, increasing the overall investment into clean energy in the state. So you might ask, why are green banks necessary? There's already financing institutions or commercial lenders that can provide loans into this space. Well, green banks are necessary because, as I mentioned, there's many different kinds of barriers to clean energy deployment, which require not just capital, but also that technical assistance piece. So I'm not going to run us through every single piece of this slide, but to pick out a couple, one is the barrier of perceived credit risk. So for example, for low and moderate income households, oftentimes due to a lack of credit history, this then blocks those households from accessing commercial loans, despite the fact that low income communities often have disproportionately high energy costs, are disproportionately affected by harmful emissions, and yet are somehow the last to access these benefits of savings from low cost clean energy. Another barrier you can see on here is that small projects often don't provide sufficient scale to attract private investment, and this keeps those commercial and residential owners from savings on their energy bill. And lastly, picking one more out here is that off-the-shelf financing terms, down in the bottom left, off-the-shelf financing terms often don't match the project lifetime, which then results in negative cash flow due to the debt rate or term. If we can click to the next one. Yeah, thank you. So in terms of how do green banks actually solve these barriers, these problems can be solved by a green bank who is solely dedicated to knocking down these barriers for faster and cheaper clean energy market growth with a focus on equitable deployment. So some financing solutions include, and those are over on the left side, you can see, one is using the green bank's mission-driven capital to offer lower rates or longer terms. That would solve the last barrier we talked about, which would then actually better match a project's cash flows. Oftentimes, clean energy projects need a longer term in order to see those positive cash flows. A second would be using alternative underwriting criteria or credit enhancements to address households with limited credit history to bring clean energy benefits to low and moderate income communities. And a third solution here would be a financing solution for small projects, which would be for a green bank to essentially standardize, aggregate, and then warehouse those projects so they can be bundled and then sold into the private market, allowing small commercial and residential owners to also access the savings of clean energy that they need to survive, especially in times that are as challenging as this. And then over on the right-hand side, in terms of market creation strategies, which will also help overcome barriers, a green bank can act as a first mover to spark deals that require collective action. Green banks can partner with businesses to create and train a massive new clean energy workforce, creating more jobs, again, in a time when unemployment is high and things are challenging on the job market. A great and demonstrable success in green banks for that. And third is employing innovative structures like commercial property assessed clean energy or on-bill financing products to expand access, similar to what Catherine was talking about earlier. In terms of the recommendations from that energy efficiency roadmap, maybe you can see now that a green bank really cuts across all of those in terms of education and workforce, helping to create more efficient buildings, deploying that capital in an equitable way, helping to reach low income households, and then creating new financing mechanisms and partnering with nonprofits and public entities. So this covers what a green bank is and what kinds of products might be created. So I'll now hand it over to my colleague Jill to talk through some of the exciting opportunities for possible federal funding.
Great, thanks, Hannah. So first of all, let's go to the next slide. Wonderful. So thanks very much. I'm Jill Bunting. I'm the Deputy Director at the Coalition for Green Capital. And I wanted to talk today about how states and cities find the money to seed their green banks and clean energy funds and do all the important and wonderful things that Hannah was just talking about. So in our work around the country, we've helped states identify a range of funding sources for their green banks. And that can be from state funds, utility funds, sometimes philanthropy, sometimes it's a mix of all of the above. And these are all really important sources of potential funding to explore and I think can complement the federal effort that I'm about to talk about. But as we're just starting to think about possible pathways for what funding a green bank in South Carolina could look like, I wanted to highlight a new funding source at the federal level, which is an entity called the Clean Energy and Sustainability Accelerator. And this is a concept where the federal government would make a one-time appropriation to a new nonprofit called the Clean Energy and Sustainability Accelerator. And then that central entity would turn around and make money available to local green banks and clean energy funds like in South Carolina. One thing that I want to highlight about the nature of this funding is it's available both for projects themselves, so to be invested in projects, but it's also available to help the green bank pay for some of its operating costs. And this is really important because it's important to have the right people and infrastructure in place to do the market development work, to tackle those persistent barriers that unlock some of the investments that Hannah described earlier. Finally, once the green bank was operating, the state would then marry that federal money with the private sector, jumpstarting more investment in clean energy and resiliency in South Carolina. So let's go to the next slide. So what kinds of projects would be supported in South Carolina? As written right now, the accelerator will be able to support work across 7 broad sectors, and that includes renewable energy, buildings, the grid, transportation, industry, forestry and agriculture, and resiliency. And the diversity and flexibility of this approach is really, I think, kind of unique from some other federal efforts. And that just reflects the reality that we can't solve the sort of challenges that we're facing by only addressing the power sector or only addressing the building sector. And we can't realize the full jobs potential or equity benefits without also addressing things like industry and resiliency. And we need a tool that allows for really a portfolio of solutions. And that's sort of the aim of what the accelerator is trying to open up for green banks at the state level. So let's talk a little bit more about that equity component. As it's currently conceived, the accelerator will make at least 40% of its investments in disadvantaged communities. And these frontline communities are the ones that have been disproportionately vulnerable to the impacts of climate change. And at the same time, they've also been less able to historically access the benefits of renewables and other types of clean energy technologies. the accelerator wants to reverse this model to make frontline job creation and business creation a priority for state green banks around the country. Let's go to the next slide. Yeah, so why am I talking about something theoretical? A couple of reasons. How can this possibly happen in a climate where there's a lot of division and sort of discord about what the future of investment might look like? And I would highlight a couple things. One, the concept of green banks and this kind of blended investment in the private sector really has huge bipartisan support. According to the polling we've seen, by large margins, Americans agree that funding clean energy and resiliency should be a priority for the next administration. And when they learn about the accelerator, 2/3 of Americans support it, with significantly more Republicans voicing their support in opposition. This is really not a Democrat versus Republican issue. This is really a bipartisan issue, which also reflects the sort of map of green banks that across the country. If you look at places where green banks have thrived, it's some states that are historically more blue, like New York and Connecticut, but it includes places like Ohio, Colorado, Nevada, places that are much more politically mixed. And that's because this idea has resonance across the political spectrum. Nearly 100 organizations signed a letter of endorsement last summer, and that number has only grown. And that includes some of the largest environmental organizations like the Sierra Club and the League of Conservation Voters, but also includes key industry leaders like the Solar Energy Association. And then the last thing I'll mention is that congressional support for the accelerator has really been huge. The House bill passed the House twice in 2020, and that bill, which called for a $35 billion appropriation, again, already passed the House twice in just the last 6 months. There's great leadership happening in the Senate on the companion legislation. And we think that as the nation looks towards an economic recovery, there's a real opening for including the accelerator in a stimulus package in 2021. Let's go to the next slide. So the last thing I'll say here is that South Carolina is in good company in considering a green bank or clean energy fund at this time. Across the country, stakeholders are working to set up green banks to receive funding from the source, and stories and voices and support from South Carolina are crucial. We're going to, if you look at this map, you'll see that North Carolina is highlighted, as Catherine mentioned, at the top of this column. I think we're going to hand it over to some folks in a second to talk about what's going on there. If I could encourage a little friendly competition. But this is all to say that if this is an effort that you're interested in being involved in, please get in touch with us. Thanks very much.
Great, thank you so much, Jill. Really appreciate that, and Hannah as well. We'd now like to hand it over to, I believe, who's next. Can you advance the slide? Okay, so North Carolina. So, and I saw that Jen just joined. So Jen, are you with us?
I am with you, just in time to hear a healthy competition between South Carolina and North Carolina. I love it.
Okay, well, Jen Weiss, she's with the Duke University Nicholas Institute. We're thrilled to have her. She was the key brains behind our energy efficiency roadmap, and we're really thrilled to have her back to share some experience about the North Carolina Green Bank development. So Jen, it's off to you.
Fantastic, Catherine. Thank you. Thank you for asking me to come chat with you all today. You can go to the next slide, please. So as Catherine just mentioned, I think I know many of you through the process that we are going through, just wrapping up the South Carolina Energy Efficiency Roadmap, which I have just been so thrilled to be a part of. There's so many great things coming out of that, not the least of which is the recommendation for a green bank in South Carolina. And so what I wanted to do was just share very quickly with you North Carolina's process, which kind of went very similar to how you guys are getting kicked off. Back in 2018, we kicked off a North Carolina Energy Efficiency Roadmap, and out of that was a recommendation for a green bank or a clean energy fund. That rolled up into the North Carolina Clean Energy Plan, which was a statewide plan for the state. So the green bank recommendation also was included in there, as well as we had a Department of Transportation zero emission vehicle plan where creative financing, I think was the way they put it, was recommended there. So very strong interest for a green bank in North Carolina, very similar to what I see in South Carolina as well. So it's pretty exciting for our region. So based on those recommendations, we, the Nicholas Institute, partnered with the Coalition for Green Capital, our friends Jill and Hannah on the call today, to do a market assessment for North Carolina. So talking to different stakeholders about where are there gaps right now that in financing that you can't get projects done because you can't find the financing to do them. We know there's financing out there and it's helping for some projects, but we also know there are a lot of gaps and things that we could be doing if we had the right creative financing mechanism there to do it. And so we put a lot of time and thought into what are these gaps, and we worked with stakeholders and found out what the barriers were and came up with some solutions. And this resulted in a report which we published last month, maybe the month before, which outlined what these are. And I'm going to show you a few of them in just a second. But the exciting news that I wanted to share with you guys is not only did we launch that report, we also established a nonprofit clean energy fund, the North Carolina Clean Energy Fund, which we are standing up as we speak. And we'll have our first board meeting actually on Wednesday to start discussing the pipeline and the fundraising and the bylaws and the guidelines and how do we get this started. So we're only a little bit further ahead than South Carolina, but I know you guys, and I know you guys are going to catch up with us quickly. So I'm looking forward to that. Hannah, you can go to the next slide. So just real quickly, I wanted to just share with you some ideas and thoughts. When we talked to the stakeholders in North Carolina, these are a few of the roles that we found it could play. These could be roles that it could play in South Carolina, but they aren't necessarily the same roles. I'm just putting them out there so that you guys can get a feel and a flavor for what we're thinking about in North Carolina right now. So the four roles that we see are as a connector, a risk mitigator, a direct lender, and a bundler. And you can see there kind of, what these are trying to, what barrier they're trying to overcome and what some examples might be. I'll give you just a couple of examples, specific examples from the stakeholders. In the connector role, this is something that could be for maybe a first of kind transaction for a new technology, or it could be new to a group, an organization that just hasn't done this type of clean energy financing in the past. And so we feel like this role could be technical assistance. And a couple specific areas where we see this could work in North Carolina is with their local governments, maybe the cities or the counties, trying to do more renewable energy. A lot of them have 100% clean energy goals. How can we connect them with financing to help them achieve their goals? Another might be on-bill financing. Both in North and South Carolina, we have some very good on-bill financing programs already, but can we scale those up? And what kind of technical assistance is needed to scale those up? And so those are a couple of ideas there. In the risk mitigator role, it's really just overcoming where there might be perceived project risk. So it could be maybe a perceived credit risk, or it could be because it's a new technology, just people do not want to invest in it. So here we can offer a credit enhancement of some kind. Maybe it's a loss reserve, maybe it's an interest rate buy down, or a variety of others that I'm sure Hannah and Jill already discussed. One of the things that we thought would be interesting in North Carolina is to use this to expand the programs that we have for affordable housing. We've got a really great housing finance agency in North Carolina that does great work, but they just need to do more. And so how can we do credit enhancements to help them be able to do more with what they've already got? And then under direct lender, this is just if there's marginal economics, maybe private investors don't want to come in, we can do co-investments. And a good example of this would be perhaps for electrifying school buses or transit buses, where there's a cost differential between purchasing a new diesel bus and a new electric bus. But if the Green Bank or Clean Energy Fund could come in and help with that cost differential, we feel there's a lot of potential there. And then finally, bundling is more for smaller projects. So perhaps something like a heat pump water heater program or another efficient appliance program. One-off loans for those might not be interesting to a private lender, but if you can aggregate those together, a whole bunch of them, it would be an interesting investment. And so we're looking at doing things like that in North Carolina. And I probably took up my whole 5 minutes, so thank you very much.
That was really helpful perspective. Thank you so much, Jen. And before we move on, I do want to mention that we'll make sure the link is there, but this is a report I'm holding up if you can see me, that the Duke Nichols Institute published along with the Coalition for Green Capital. And I've read it several times to try to get my brain around it. It's very helpful. I just seeing a real case study of how it was approached in North Carolina. So we really appreciate your perspective, Jen. Without further ado, I'd like to move on to South Carolina. We have two key stakeholders from from our state who were integral in the work of the energy efficiency roadmap, which I mentioned earlier. John Frick served as chair for our financing mechanisms working group. And I'd like to have him, I've asked him and Keisha to provide their perspectives about their respective work with their working groups. So John, do you want to take it from here?
Sure, thanks, Catherine. And a lot of things that we've heard today are the things that we discussed when we were working through these problems. Number one, where do you get capital? How do you attract capital? Number two, how do you address risk, but like credit issues? And three, how do you address the cost of capital? So to the extent that you're trying to attract capital or trying to address risk, the cost of capital can get to be a problem. And so one of the things that we knew and had familiarity with was own bill financing as a way to address at least some risk. Things like credit issues, you secure against the bill, you secure against electricity being provided totally, and that ends up fixing your credit issues, but you still have to attract capital. You still have to provide that at some reasonable cost. And of course, in South Carolina, there on our on-bill financing law, there are caps on how much you can charge in interest. So as we thought about how do you do that, the understanding what green banks can provide was extremely important to us. And what we've heard today, I think, just for me at least, it was helpful, educational, and shows me that there are gaps. In particular, the idea of aggregating. Either you're buying, leveraging size in order to aggregate, and either when you're purchasing materials with which you're trying to have a lot of participants do something like on-bill financing or other kinds of efficiency measures, or whether you're by aggregating, you're lowering your cost of capital. That can be a huge issue, particularly for folks who are not cooperative. So one thing we know is own bill financing and things like that are easier for cooperatives because we don't have to earn a return. And so entities that need to earn a return, they frequently find themselves in a gap between what's an allowable interest rate that they can charge and what the program will cost, and allow them to earn even a meager return. So Catherine, for me, very helpful to hear these things. We're excited about finding out more about what the green banks can do within our state, knowing that finding money is the hardest thing to do frequently, and particularly with things going crazy in 2020, and hopefully recovering soon.
Great. Well, thank you, John. That was really helpful perspective. And I want to pass it on to Keisha Long. Now, Keisha was our other key stakeholder that took on the job of chairing our Energy Equity, Energy Burden Working Group. And a lot of these discussions also happened at that working group. And Keisha has offered to speak with us to provide some perspective as well. So Keisha.
Hi, and good afternoon, everyone. I am Keisha Long. I'm the Environmental Justice Coordinator at South Carolina DHEC, and my primary job is to be a advocate for vulnerable communities, especially for the environmental burdens that exist in South Carolina, hazardous waste sites, landfills. There runs a gamut, underground storage tanks, infectious waste incinerators, and so forth. But I quickly realized that burdens don't exist in a vacuum. It's often the case that a residential area that is near a Superfund site, say, also might have problems with broadband or healthcare access or affordable housing and energy burdens. And just some facts about the burdens, energy burdens in low-income communities in South Carolina. According to the Department of Energy, low-income households in South Carolina use 36% more electricity than the low-income national average. And just in general, just South Carolinians in general spend 25% more of their income on energy, while the national average is 3.5%. And South Carolinians typically spend 25% of their income on energy. Now, I see there's a map here. As I was stating, there are different burdens. And as you know, we're in a pandemic, COVID-19. And I was speaking with Stacy Washington, also the energy officer, about this particular map. And the dark blue areas that you see on the map, and I call it a stripe from the southwest part of the state, Allendale, going up towards the northeast to Chesterfield. This particular stripe parallels the COVID-19 hotspots that we see in the state. So there are multiple burdens for multiple households, and they're typically in the same areas. As Catherine stated, I was the team lead for Energy Equity and Energy Burden Group. We came up with 3 different recommendations. They were the residential labeling. So for a renter or someone considering buying a home, they would get a heads up on the energy cost of a particular residence. That's the basic premise behind that. The second recommendation was a one-stop shop. So again, I said that one particular low-income family may have multiple burdens. So the premise behind the one-stop shop is to have one application for a person that may qualify for weatherization assistance, affordable housing, upkeep or repair, because having a new HVAC system is useless if you have a hole in your roof, and that's not unusual to find that. So that was the premise by the one-stop shop. And we had a third recommendation, which actually appears to have been implemented. It was a technical barrier on financing. Our large utilities provide funding to community action groups, but the community action agencies weren't utilizing the funding because the Department of Energy considers it to be income, and the income could interfere with other grants. So the community action agencies weren't actually using this funding. But I found out that the SCOCAP, which is the Association of All Community Action Agencies, is signing a memo of agreement with at least Duke Energy and Dominion in order for them to be the facilitators for this funding, and then this funding that's just sitting there can be released and can be used for weatherization programs. Just really quickly about the Green Bank. We believe that the Green Bank will be very beneficial to move South Carolinians to a more energy efficient and renewable energy sources. But we have to be cognizant of low income families and loans, and some may already have loans for something else, such as there are a lot of loan programs for clean water or effective sanitation, basically septic tanks. And so another loan may be a burden. So if we could have a hybrid program where there's maybe a economic cutoff, if you fall below a certain line, that you can get grants. But that's something that I think will be necessary for all South Carolinians to benefit. So thank you.
Yes. Thank you so much, Keisha. That's really some very powerful facts that you're just sharing with us right now. And I know many of our conversations during those working group meetings, really just kind of underscored the need for identifying new and creative ways to provide funding that will especially assist the low and moderate income communities. actually, this slide says next steps, but actually I think it's time for Q&A. And I'd like to pose a couple of questions, perhaps for either Hannah or Jill, and also just address any questions that came up in the chat. But I guess the first question is, based on what you've heard from the South Carolina perspective, Hannah and Jill, I know that there are green banks around the country that have addressed this myriad issues, right? So are there examples or particular examples that you think we should look to sort of get just sort of some information, some inspiration? Are there particular examples that perhaps we should look at based on what you've heard today?
Yeah, I can start. I think that so there's so many examples. I'm trying to clear them in my mind. So I think based on this call, what might be an interesting place to start is the green bank down in Florida, which is called SELF, the Solar Energy Loan Fund. And they are focused on particularly providing low-income residents with access to clean energy and resiliency financing options. They have a very interesting program in particular called My Strong Home, which uses insurance, the reduction in people's insurance premiums to help them upgrade their roof to harden it against hurricanes, and at the same time offers them options to adopt energy efficiency and clean energy as part of that. So it can all be rolled into one financing package, and it ultimately saves the resident money on their bill every month. So it's a net benefit there. And I think it's a great example of the kind of smart ways that we can make people's homes more comfortable, safer, and also reduce energy bills. So it kind of talks about that kind of portfolio approach that green banks have in working markets. And any thoughts on particular examples that might be helpful for folks who are curious about learning more?
Yeah, I think maybe one other, just in terms of following up on what Keisha was saying, in terms of making sure to provide access to low-income households. Excuse me. I think one other place to start would be to look at the Connecticut Green Bank, particularly their Smart E solar loan model. I think that's an interesting one just to learn more about, because the state of Connecticut is actually what's called a beyond parity state in terms of deployment of solar clean energy to low-income households, meaning that there's actually more low-income households with solar than there are median and high-income households with solar in the state of Connecticut. And that's largely due to the Connecticut Green Bank's efforts. So just in terms of looking at the impact that a green bank can have on providing more capital in a more accessible way. And I definitely agree with you, Keisha, that I think that has to be paired with an understanding of any households or individuals' current finances and other loans they might have on, and programs must be tailored to that. But I think that's one other place to start.
Well, thank you, Hannah and Jill. I guess Landon, I know there's some questions that have shown up in the chat. Do you want to be MC now?
Yeah, exactly. We do have a couple of questions that have come through. And we have one from Bradman Meter, who is asking about green bank programs that have been facilitated by CPACE finance programs, and in that maybe possibly if there's some synergy there to help push the proposed legislation to enact CPACE in South Carolina. So I guess, with the legislation for CPACE and the Green Bank, what's the synergies with those?
Well, I can just briefly bring up the fact that CPACE was brought up in one of the working groups of the Energy Efficiency Roadmap. And it was just decided that there was just not enough interest and support for pursuing that. I know that it had been certainly discussed several years ago, but when we brought it up for discussion in particular, I think it was in the nonprofits and public entities working group that was brought up for discussion. And it was just decided at that point that it was not sort of viable at this stage. And so that's why it didn't even make the cut, so to speak, for the discussion of energy efficiency roadmap. That's not to say that is just one little group of stakeholders, though. So I'm not speaking for anyone but that group. But I'm just saying that that's what I can report from that effort. But I do want to say, it sounds from hearing the examples from other places is that this notion of some kind of green bank, some kind of funding source can be paired with existing programs to basically provide those synergies. So that is really the key, I believe, right? In success, am I getting that correct? That it needs to be paired in some way with existing programs or with other efforts underway?
Yeah, absolutely. I think that, CPACE is a great example of that, even if it might not be the exact mechanism that works in South Carolina. But I think it's a good illustration of how the Green Bank might interact with commercial lenders, with utility programs, with, the other people who kind of populate the ecosystem. Because, in CPACE, there are a wide range of lenders in some markets, and those lenders really focus on a certain type of project that tends to be fairly large and maybe have, like easy access to capital. But what we see sort of consistently across the country is that there are all these small projects that are still good projects, but really aren't quite worth the diligence cost for a larger lender to take a look at. So having someone who's mission oriented in the market and wakes up every day trying to think about how they can remove barriers has been really important for getting those smaller projects done. And if you look at Connecticut, what they've done, they're one of the first green banks to work in the CPACE market, and they went around and they bundled up these smaller CPACE projects and then sold off that portfolio to a commercial lender who was very happy to sort of take those projects, but needed someone to actually do the legwork of putting them together. And that enabled the Green Bank to recycle its capital back into the market so it could keep making loans and kind of growing the number of projects that got done in the state. And that kind of model of thinking, of examining what's going on and where are the gaps, I think is the kind of lens that the Green Bank would bring to something in South Carolina, whether it's in CPACE or more broadly in energy efficiency, renewables, resiliency, that kind of thing.
Thank you.
And I'll say, Brad, if you want to put your contact information in the chat box, and if folks have other questions about that CPACE legislation, they can certainly contact you to get in touch. So feel free to put your contact information there in the chat box. And then we have another question about the next steps for residential labeling and the one-stop shop ideas from the energy plan. What are the next steps for those recommendations?
So I would call on either Keisha or Stacy, since both of you were working on that recommendation. Sorry.
I would say the next step that we have currently, what's going on is we're looking for people to pilot those ideas. So those ideas were brought forth as pilots. So now we're looking for municipalities to sign on or to show interest in the residential labeling pilot, and any entities that would like to work on the one-stop shop, if they are a community action agency or someone who offers home repair or something like that. We need to bring all those groups together. So we're looking for all of those different partners or players to show interest and come to the table to work with us.
Great, thank you.
And this is not a question that is currently in the chat. We have answered it, but I wanted just to answer it for those folks that may not have access to see the chat box. But the question was about when the EE roadmap would be available and whether that was available, on the Energy Office website or anything. But do you want to touch on that, Catherine? Stacy did address it in the chat box.
Right, exactly. And so the energy efficiency roadmap basically is in its final production. It's being made to be beautiful now. The actual content is complete, and it's actually being sort of formatted and made. So hopefully we'll have that by the end of the calendar year. There, of course, due to a variety of factors, there have been some delays, but the bulk of the work is done, and we're just waiting for that. And we'll be on our website. We do have other information, though, about the activity of the energy efficiency roadmap on our website, and we will post it there just as soon as it's available.
Awesome, thank you. We had a question come in for Hannah. If you can give a little more detail on how green banks can be tied to workforce development efforts. You maybe mentioned an example or two, but if you could talk a little bit more about that.
Absolutely. So there's a couple of examples that we're actually working on now for the federal level in terms of the Clean Energy and Clean Energy and Sustainability Accelerator. I'll mention one, which is there's sometimes a challenge with individuals who have gotten training in order to be a clean energy worker, whether that's an electrician or an installer, where you can go through the training, but then you need a certain amount of on-the-job work hours in order to actually get your certification and to be able to be hired on as a clean energy certified professional. And so one of the ways to actually help with that is to essentially finance developers with a lower rate or essentially cheaper terms for their loan, with the requirement that in the projects that they're working on, they must hire on recently trained graduates from a program in order for them to get their on-the-job hours, in order for them to get their full certification. So there's a couple different ways to use that kind of incentive with lower cost capital and providing that to developers to incentivize them to hire on new trainees, individuals who have just gone through that program, and other examples in order to increase the workforce, both from individuals who have gotten training as well as ways to finance that training itself.
Awesome, thank you. And I do see that Natasha says community action agencies are interested in this program. And then Brad has put his contact information in the chat box for folks that are interested in CPACE legislation. So those are all the questions that we have in the chat box, but Catherine, I'll turn it back over to you.
Okay, well, I do have some questions, and I don't know if Jen or Hannah or Jill would be the ones to talk about this. I know that there's discussion of the 4 roles that a green bank could play in North Carolina, and one of them was one of bundler. And I wanted to get a better understanding of what that means. Does this mean sort of that it would be bundling projects with longer paybacks with other projects with shorter paybacks in order to make it more feasible? Is that what we're looking at? I was trying to understand that concept a little more.
Yeah, hey, Jenna, are you still on? If not, I can.
Yeah, I can start, but then Jill, I might turn to you. Yeah,
okay.
So just Catherine, the one I was specifically talking about were smaller projects. So let's use heat pump water heaters as an example. You know, these are usually less than $1,000. Might not be as interesting to a private investor, a financial institution to do on its own. But if you bundle a bunch of those together, it becomes a very nice looking investment to them. So you'd bundle those together. We hadn't considered what you just mentioned though, which is the shorter and longer terms. And so actually, Jill, I'm wondering, have you ever seen that happen?
Let's see here. The term thing is a little bit complicated for in terms of trying to explain that to a commercial off-taker, I think is the challenge. But if you could get enough scale, it's theoretically possible, and I think would be a really cool thing to work on if that was of interest in South Carolina. In terms of the smaller projects, yeah, I mean, absolutely what Jen just said, that unfortunately it takes usually the same amount of diligence cost to do a $10,000 transaction as it does to take $100,000 do a $100,000 transaction, and that barrier to entry is just tough. And as a result, those smaller projects kind of fall off people's radar unless you have someone like the Green Bank, who, as Hannah said, is mission driven to make sure those sorts of projects happen.
And I'll maybe jump in here and just add one more thing that I think is really crucial about understanding what a green bank is in terms of commercial lenders. Even if it's actually looking at that portfolio of projects and economically viable, they might not have the technical expertise to actually go out and execute on those smaller projects in terms of understanding the risks of that technology, or have the expertise on staff to go look for those projects. So that's also a piece of the role that the Green Bank plays in providing the technical assistance to actually go out and as Jill said, do the legwork of those projects, and then be able to provide a larger portfolio to a commercial lender.
Thank you.
And we have a comment in the chat box from John Brooker with MUSC saying that for their performance contracts, they bundle short and long-term paybacks. I'm assuming that he's saying that's an example of them bundling those.
Right. Okay.
And then we also had another question come in from Brian asking, if South Carolina pursues the concept of a green bank, is there an existing entity that currently exists that can serve that role, or does a new entity need to be created?
And can I, and Jen, I don't want to pick on you, Jen Weiss, but I was wondering, since you all had that exact deliberation in North Carolina, can you explain sort of, I know you did address it in your paper, in the paper that you all collectively wrote, but could you explain sort of how you ended up with a nonprofit model versus some other kind of entity?
Sure. And I'm not going to go into too much detail because I'm not sure what you guys talked about already, but it is in the paper. But there's different ways that you can set up these green banks, and some can be public green banks that can be set up by legislation. Others are nonprofits where they don't need any legislation to be established, and they can be set up on their own. North Carolina took the nonprofit route for reasons I will just leave alone, but we feel like that is the best option for North Carolina to move forward. So we are setting it up as a nonprofit. We will do our own fundraising to get it established, and then work in partnership probably with the state to do some programs that are important for this from a statewide perspective.
Okay. Thank you. And I guess Hannah and Jill, how, of all the green banks that are out there, like what's the most common, or is there not sort of a most common one? Are they all just different depending on what state you're in and what the needs are?
Yeah, in terms of the form, they really vary. And I think that's one of the things that I think is most interesting about green banks is there's the diversity of the approach, because energy markets and resilience markets are inherently local. So the kind of pathway that each place goes down looks a little bit different. I would say recently we've been seeing more of a trend towards the nonprofit model that Jen was describing, because it typically offers a faster time to start up. It kind of lets you take on different types of capital up front. There's just a little bit more flexibility that it enables that has been attractive to some of the states that have moved most recently.
Okay.
And those are all the questions that we have in the chat box. So Catherine, I'll turn it back over to you.
Well, does anyone else have any questions? And even if you don't want to put it in the chat, if you just want to speak up, you can do that as well. Just before we don't want to cut this conversation short. I knew I had a couple of other questions. I'm trying to see. I guess I would want to know from other states, from the experience that Hannah and Jill that you have had throughout the country, from this type of conversation we're having today in South Carolina to having something in place, like what are you looking at? What do you typically see what kind of time frame are you looking at typically?
Yeah, it's a great question. And again, I would just say it really, really varies, but having this kind of sort of coalescing of interest from a group of stakeholders is usually the first step. And then from there, it really comes together to figure out how are we actually going to embark upon the process of doing something that looks a little bit like the assessment that Jen described for North Carolina, where you have the opportunity to say, okay, here's what is going on in the market right now, and here's what's not going on in the market, and here's really where the green bank can be additive, both from a institutional perspective and from what kinds of programs it would offer. One sort of point of context is in North Carolina, and Jen, I think we launched that process about maybe 10 or 11 months before the study came out, and that took a little bit longer for other reasons, but it's to say that you want to do a little bit of a media assessment up front to make sure you sort of understand how this is going to interact with things that are on the ground. Once the institution is incorporated, we did this just most recently in Colorado, where within, I think, the first 6 months of incorporation, they had their first transactions coming across. So once you have things that are set up, and if they have a well-articulated business plan, they can move quite quickly in the market to actually getting deals done, which is really exciting.
That's helpful. Thank you. Great. Does anybody else have any questions? I'm trying to make sure we touched on the ones that I've seen pop up as well. I guess one other question regarding that assessment, is there, would you suggest that the example of North Carolina, that document we talked about earlier, the thing that the market opportunity overview that just came out, is that sort of the typical approach though, in terms of the type of assessment that is done? Is that as a first step?
Yeah, absolutely. I think that's a great example of the kind of process that sort of lays the foundation for what the green bank could look like. It's looked a little different in other places. In Colorado, for example, we worked through a DOE process, a Department of Energy process, to create the business plan for the green bank there. But that kind of stakeholder engagement and reporting process. I think is fairly consistent across the states.
Okay.
And we did have another question come into the chat box from John. His first question, I don't know if we would be able to answer without a little bit more specificity, but historically in South Carolina, what's the percentage of funds spent on residential versus commercial projects? So John, if you have more specifically what type of funding, I think that would maybe help us to figure out if we can get the information on what that percentage would be. But the second question is asking about if green banks fund only projects that transition from less efficient to more efficient energy sources, or do they just fund simple energy conservation projects? So I guess the question is, I guess, the type of projects that these green banks funds.
So I guess Jill or Hannah, I think what you were talking about, and there was that one slide, I don't know if you want to go back to that one that talked about I guess there's 7 different categories. Is that, and maybe you could speak to that and sort of what you're seeing. Is there a slide with the 7 categories? I can't remember from the Clean Energy Accelerator right here. Oh, sorry, back here, back up one. There we go. Is this what you're typically seeing, Jill and Hannah then? It can be like a range of, I guess these are more sectors or more topics, but in terms of time.
Yeah, so these essentially are looking more at the sectors and what kind of projects would fall under this. I would say, as Jill kind of already alluded to, it really depends on the particular energy market. So would look at that assessment of what are the market gaps and what are the market needs. But in terms of energy conservation and energy efficiency, that definitely falls under looking at buildings and energy efficient buildings. We're also looking at the ability to pair energy efficiency projects with healthy housing initiatives. So once a project is already going on in a house, being in there, being able to also update other things as well. So that might also play into energy conservation projects. John, I'm not sure if that's entirely answering your question. If not, feel free to unmute and let me know more specifically what you're looking for.
In my impression, just based on what I've learned from all of you and from talking with Jen as well, is that it seems as though there's just a great deal of flexibility in the green bank model, and it really can be adapted to the needs of the particular state. So some might be focusing on the LMI for solar for the low and moderate income communities, and some might be much more focused on the commercial sector, right? It really just depends on what that market assessment tells you. Is that kind of what you're talking about?
Absolutely.
Okay.
Yeah. So I think it takes that process of understanding where the gaps are, because as you mentioned, there are already a lot of programs and initiatives going on in South Carolina. So understanding where you're going to provide the additionality to that and working into the market on where those gaps are for funding.
That's great.
And then,
questions?
Sorry. Yes, another question from Michael. How can someone get involved in helping set up a green bank in South Carolina? It's a broad question, a heavy question, I'm sure.
Well, I will speak to the Energy Office and the Office of Regulatory Staff. I mean, certainly a recommendation that came out of the Energy Efficiency Roadmap was to evaluate the potential for a green bank in South Carolina. This webinar today is the first step toward that. We don't have any specific action items yet identified, but I'm assuming that we'll have perhaps additional conversations regarding green banks moving forward, and perhaps looking more closely at what a market assessment might look like. The intent of the Energy Office is to look at all the 20 recommendations from the Energy Efficiency Roadmap and begin working on them. So if there's interest, I would suggest please reach out to us if you're interested in being part of that conversation, and we will definitely include you in any continued any kind of webinars or any kind of information gathering or any kind of opportunities like that moving forward. We definitely, what I was so pleased about, what we all were pleased about, was when we saw the registration list, is that it really was from the whole spectrum of different sectors throughout the state. So it was, you know, it was not just one narrow focus, but it seems like there's a great deal of interest from a variety of sectors. So that's really promising to have these conversations at this scale with this many different interested parties. And I would just, Hannah, I guess Hannah and Jill, do you want to add anything regarding, I think, yeah, here we go, next steps. Here's some good reading material. Jill or Hannah, do you want to speak to this real quick?
Yeah, sure. No, I'm happy to jump in here. I would just echo what Catherine just said. And if you're interested, particularly in learning more about green banks, having one-on-one conversations, diving into that, our contact information will also be available at the end of this slide deck. Feel free to reach out to us. And on this slide, we've provided a couple different resources to learn more about green banks. One is the 2020 annual industry report. So in terms of getting started on understanding what other green banks are up to, what kind of programs they're offering that might apply to South Carolina, you can look there. The second is catalyzing investment for environmental justice. This is looking mostly on the federal level for the Clean Energy and Sustainability Accelerator, but very much so goes along with the conversation we were having with Keisha. And the last one is the Clean Energy and Sustainability Accelerator overview. So if you're interested in learning more about that overall funding opportunity that Jill spoke about, that will provide you some more context for it and what the work is that we're doing on that point. And if any of these are of interest to you and you want to have more conversations, definitely please feel free to reach out to Coalition for Green Capital as well.
And if you advance to the next slide, Landon, please. So here's contact information for both us at the Energy Office as well as the Coalition for Green Capital. So at the bottom, you can see our respective websites, but we'd love to continue this conversation. I just want to, I guess if there are no more, should we just see if there's a final call for questions?
I don't see any in the chat box, but if anyone wants to unmute to ask a question, you can do that as well. We have some people that are on the phone.
So hearing none at this point, I just really want to thank the Coalition for Green Capital, Hannah and Jill, for providing such expertise to us and sharing your time with us today. Also want to thank John Frick and Keisha Long and Jen Weiss for sharing your perspectives and your expertise with us as well. I think this is a great first step for this conversation, and we look forward to having more. So please stay in touch with us and reach out to us directly if you have some interest in getting more involved in an individual level in some of these discussions. So without further ado, thank you all very much, and have a great rest of your afternoon.
Thank you, everyone.
Thank you.